The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians on this first trading day of September. My pleasure to be here, 4th of September. Can you believe September already? Huh. You know, up here in the Northeast, we cherish those beautiful days because, it doesn't get freezing straight away, but mentally, we're on our way downhill from here, even if there's a couple of decent weeks. Well, let's get going. I'm going to start off with the Dow. The Dow is down 105 at 25,859. The high of 26,167 that was made last week. Now, as I did I went through, I sent a lot of charts out to my subscribers over the weekend. That's nothing. I looked at so many charts. I went through the Investors Business Daily top at least 2 dozen. I went through different charts, different sectors. And I have to tell you that a great deal of what I looked at said, hey, this market, by any stretch of the imagination, is getting kind of toppy on the shorter term. Weekly charts could still handle slightly higher highs, maybe even go sideways. And the monthly charts are still looking really good. But just look at this Dow chart. Everything about the candles, everything about what I was looking at over the weekend said, even though we were long, the Dow, it said, based on the MACD going to a higher high and the price going to a higher high, and the stochastic holding at that point in the mid-80s, now it's at 86%, but I think it was at 80, what was it yesterday? I think it was 87, 88%. It said to me that there's a really good chance that within the context of what we're looking at, we're getting quite toppy. However, when I looked at the notation based on the Chapman wave methodology, and this is where I have to rely on the technique of the Chapman wave a lot more than I would prefer to, but I like to be strict to the patterns unfolding. So I'm looking at this, and yes, there could be, let me just put this back. I took it off, but it should be there. A G/B, that's an alternate count. G says, whoa, be very careful. You're about to come tumbling down. B says, no, what are you talking about? This should still be a C and a D in the Chapman wave methodology. I'm not sure I've got it right here that I can show you. Trader's Corner. Let me just see, because this will just explain for those of you who are new to my work. Yes, there it is. Good. In the Chapman wave methodology, there's a very simple technique. And on paper, it's simple. In real life, it's not quite as simple. It's just like all things that you write down. Following it is really key. Try to identify the lowest, most obvious low bar and merely count each successively higher peak. I alphabetize them, going to a G, but it's the fourth highest peak. Peak A is 1, peak B is 2, peak C is 3, peak D is 4. It's at that leg D that goes to a peak D where other things can happen. We've seen not just dozens, not just hundreds, literally thousands and thousands of times over the years that I've been here at TFNN, where a D has had a really important pullback. All right, be that as it may, this is what I'm looking at. There's a technique that I use that says, yeah, you could have an alternate count, but I don't see how I could have an alternate count with peak D on at 25,587 on the 26th of July, pull back, hit the 14-period moving average, rallied sharply to 25,692 for leg E, then a peak E confirmed at 8.7, or confirmed in the next session, and then it takes out the low of B. That was 25,120s. So we go to 24,954 on the 15th of August. It seems to me, no matter how I count it, that this is more likely a B than a G. Why? Because, yes, you could continue up because that pull back after he didn't take the initial starting point. But you'll see as I go through the different charts why it kind of makes sense to think that way. So the weekly chart is really key. What I've said is everything about the weekly chart going into Friday's session suggested that really this leg E should become a peak E, but my daily chart says, wait a minute, there should still be one more nominal series of highs. Doesn't have to be very high, just needs to take out 26,167, even 26,168, 170, pull back, and then one more, and then we're done. And then you've got your D. And then I can say, aha, now is it time to go short. That's number one scenario. Look at the S&P. So as I was saying, the charts that I went through, so many of them were making these Ds and Es or Cs in their daily charts that I had to say, you know, I think it's going to be time where some of our longs are going to be taken out, and I think we're going to switching to the short side. Haven't started that yet. I'm very, very close to doing that. Now, in the S&P, you've got a peak B/C. Why? Because however I count it, you've gone to a G, it could be G, B, C, R. Oh, this is terrible. I don't want to get anyone confused. Just make it real simple. The MACD is strong, the stochastic is strong. Yes, they are turning down, but they're still at very good levels. It's holding the 9-period moving average right now, down 13 at 28,888. My thinking here is that if there is a turnaround, it needs to happen really soon, and then there should be at least one more nominal high, 29,016.51 or higher. And then I'm going to start looking to say, oh, okay, are we ready to come down? I am wrong. I said to subscribers, I'm wrong if the Dow goes down about 200, I think I said 250 points. What did I say? I said wrong if the Dow slides more than 230 points to the downside today. So we'll see what happens. Now, the S&P says the support at 2885 to 2878 should be very strong. That's the key level. Now, when I'm looking at the QQQs, this is the NDX 100 trading vehicle, the Invesco QQQ Trust Series. Here again, I could have an alternate account F/C, but everything about it suggests there should be some kind of sudden flurry of minor activity that takes the Qs from the 187.52 high that was made 3 days ago. Doji candle, everything about it said that really looks like a little toppy action, but my wave count says there should be a D. Somehow, some way, there should be a D, and the Qs are down 0.66%, Dow's down 0.44%, S&P is down 0.44%, so the Qs are having a deeper correction, and I think Facebook is part of that. Facebook down 4.59 at 171.13, down 2.62. I've said that I think that the monthly chart of confirmed last Friday at a peak E is going to take quite a number of months to correct. That's just my thinking here on Facebook. And as we go through these different stocks, you'll see Amazon, leg C. This is your leg D that I was waiting for. So it's gone to a leg D, up 22 at 2036. I think we're getting closer and closer to at least some kind of short-term top. Might be a little deeper than a short-term top. And that's what I'm looking at. When we get back, we'll look at the IWM, we'll look at gold, silver, and the dollar. I'll be right back. Basil Chapman,
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So I'm looking at this on a very short term. Yes, the E-minis is a 2-minute, 5-minute, 10-minute charts. Got your U-shaped formation. I think this could possibly be, needs to be, the internal low right here at 28.8625 at 9:55 this morning. Residual low was made 10 minutes ago at 28.87.75. Now, it's going to be really important. First of all, what we're looking at over the last couple of days, any of the pullbacks hasn't really been what I call bear market material, meaning the S&P E-minis would be down 15 with the Dow down triple digit, trying to rally and then pulling back and then closing at the low of the day. Today would be the first opportunity for that to happen. Hasn't happened yet. So I'm looking at this and I'm saying if the E-mini is able to travel to the upside at 280.90.25 right now, if it's able to get to let me call it 28.97.75 within the next hour, that's another 7 points higher, or a little more than that. In the next hour and a half, 12, 20. I'd said for subscribers, it's at 120, 130 time frame as the next boost. If there's going to be a good close, that's when it should happen. The 11:10 Eastern time frame had the weakness scenario. Now we want to see the next half of the trading session try to find some support. So far, this is reasonably good action, considering that there was enough of a mixed news and bad news and good news, kind of a mix over the weekend that said, you know what, if the market pulls back, it could pull back right into Wednesday, Thursday. And if it does that, and as I say, 230, 250 points down in the Dow, that's where I'm going to be very cautious. But I think that is just enough strength to try to fulfill some of these, the obligation of some of these key indices and stocks, just to make a little flurry of slightly higher highs. That's what I'm looking for. We'll see. We'll deal with what we get. Okay, enough with that. Oh, and support has to be at 28.85. Any close on any 10-minute bar below 28.85 is a real problem. Okay, here we go. So Amazon, when I say leg D in the day. Look at that leg E in the weekly. This is not parabolic, but it is steadily high, and it says very good support in the 1833 to the 1790s. Not any sharp weakness, but it's still a very strong series of technicals in the weekly. The monthly chart is absolutely fabulous. Leg E extended today into September. You can't get a peak E in the monthly until all of October is completed. All right, here we go. IWM, now this is going to be very interesting because small caps they've been everywhere. They've led, then they've pulled back. Then they were the leaders of the pullback. Then they were leaders of the move up. And then that last move in August, they kind of led the way up. And they broke out of that sideways channel that they were in. So now I've got F/B in the daily chart. Could be an F. I didn't finish the A, B, C, D, E. Made a peak E in the 120-minute chart. This is the iShares Russell 2000 trading at 171.54 down $1.48. Hey, look at this. When it comes back down, it's just tested the 9-period moving average. The 14-period moving average of 170.88 is key. A close below 170.33 in the next 2 days, not good at all. A push to the 172.23 level by Tuesday afternoon, Wednesday morning would be good action. It could have completed its move for now, and we'll look at, you see this pattern here, almost like a stalk leg formation in the weekly chart. Very interesting pattern. Meantime, IWM is going to be partly a clue, one of the many clues, but a very important clue because the monthly chart broke resistance, very long-term resistance, and it closed August above the trend line resistance. Going to be very important. That makes the 167s in September really important support. Let's keep going. IYC. I just want to do the IYC because this is the Select Consumer Services ETF trading up 40 cents at 210.48. Very Amazon-like. It's predominated by Amazon's percentage and everything about it being number one. And this is going to be another clue to me because at 210.48, if at any point in the next week and a half, giving it a full, actually give it this week plus next week, let's call it a week from Friday. If it is pulled back and closes any day, it doesn't have to be the weekly chart, any day at 210 right now, 0.48, any day if it closes under 206.35, that's a real problem, short term, nothing to do with non-weekly, but short term. All right, now we're going to go to gold. Gold was down a little bit before, now it's down a lot more. It's down 9.7, 9.8, and 1196.9. This arch formation, the pattern that I talk about very, very often, the lowercase h pattern, watch it closely because if at any point this week there's a close on a daily basis below 1189.5, 1189, if there's a close below 1189, then they could fulfill the entire arch formation by retesting the low that was made in the continuous contract on the 16th at 11.67.1. Weekly chart, not good action at all. To give back chunk of the gains that were made 3 weeks ago with that good green candle, I don't like that. And the monthly chart is not improved. So that takes me to silver just real quickly. Silver's doing the same thing. Remember I said on Friday, the pattern's actually a lot worse than gold. Sometimes silver holds better. This time it was worse. Today broke down completely. Wow, this is just not a good looking chart at 14.11, down 0.44 cents. Wow. I'm surprised to see the depth of this decline. DXY, the dollar is having a lovely day, up 44 cents at 95.52. So here's the big pattern. Over the weekend, I spent a little time on this for my subscribers because we're long since 90.07. It ran to 96.98 on August the 15th, pulled back. We've got a sell mode in the daily. Then I'd said, watch the weekly because the weekly has a Chapman wave stalk leg formation. That implies that it has a long move to the upside, regardless of the peaks. It's just a long move. Goes in an oval, not a rectangle. It has to be an oval pattern. And that yellow oval pattern I call the body. So that's the leg, and a stalk stands on one leg, tucks the other leg underneath the body. The body is oval. if it's rectangle, it might in the end have the same implications, but it's not the Chapman wave stalk leg formation. It's another pattern. It's a propeller shaft pattern. And in this case, the stalk leg says the oval body, if there's a break to the upside, monitor it closely because that becomes the neck. And if there's then a pullback and the pullback takes out the oval body high, in this case, I should have written it in. I think that was 95.53, 95.65. Watch carefully, because if there's a break of the body low, that's very negative in that particular context, even though when this beak pattern, the neck, look, leg, body, neck, beak. Let me just show you this pattern in a little bit more detail. Dow Industrials, there's the pattern. This is the pattern we're looking at. There's the stalk leg. See the leg? See the oval body? See the neck? But in this particular instance, the most rarest thing we've seen, we had a propeller shaft move to the upside. But that peak, we're still waiting for that peak to come back to test 18,300. I'll be back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, everyone. Let me just see if I can get this, stock list. I should have done it during the break, and I forgot to. IBD 50, there you are. So I just wanted to show you something very interesting. When I get a chance, I'm not going to press it. I can always do it tomorrow. There's no rush for this. There it is. Okay, I've got the list right here. I'll look at it in a moment. There we go. Okay, so I was corrected. We got an eagle-eyed Denner who does Chapman Wave beautifully, and he pointed out that I missed a peak, a little gray peak A in the dollar. This is leg B, gray leg B on the upside. Now, the steepness of the move down, that Eiffel Tower, uppercase A, straight up, straight down, says the fact that we held the 94.40s and have rallied now to the 95.50s, actually 95.74 was the high today, is really important. That doesn't mean to say we've completed the beak formation in the Chapman wave oval, in the Stork Lake formation. But it does say be careful, because if we have, there's usually a really powerful move when the beak is finished, and then you're on your own. You have to use other techniques. That's the completion. So there'll be quite a bit more downside to go if the dollar takes out the low, closes below the low of the 28th, which was at 94.43. Why am I spending a little time on this? I think you know by now that the dollar has been an incredibly powerful force. It's very important. I'm looking at this and I'm saying the fact that we bounced off the 14-period moving average in the weekly chart with the MACD not even getting close to crossing negative, and the stochastic did pull back sharply to 65%. The relative strength, the gray little indicator right there, is holding very well at about 63-ish%. I like what I see. That monthly chart says you've got all of September to try to take out the 96.98 high. So watch it closely. Key support is 93 in the 93.90s, both the 14 and the 9-period moving average support in the monthly chart. Okay, enough with that. So I'm saying dollar is one of the reasons why gold has been pulling back like this. And the fact that it's now accelerating means that the people that saw the dollar as having a major turn down were shocked at this big. I'm shocked, even though we held long, we haven't even taken profits yet. Normally I would say that PT takes something off. I want to see how long we can hold this as a core position, because currencies trend for a long time, and that monthly chart is trending higher. I want to see if we can stay with it as long as possible. All right, enough for that. Crude oil right now is trading. It was down, it was up. Now it's up 15 cents. It was up much more. It hit 71.40. The continuous contract 69.95. This is a leg E. Now, if you know my work, I always just grab the top and bottom. I mean, with trade stations, just easy to do. I grab the top and the bottom of the candle when you get a very long-legged doji candle like this, and I say, okay, real clear. A close above the high of today, 71.40, a close, has to be a close, is a good sign. 2 out of 3 days, or in this case, we're talking days, 2 out of 3 closes above 71.40 wouldn't just be good, it would be really powerful action to suggest we're going to go back and we're going to test this ugly red candle of a number of weeks ago in crude oil, and that was on the 19th when we made that peak E top and tumbled. I went from 73.20 down to 67.73. So normally I say halfway into the bar, this is going to have to be more. This is probably the open of 72.37. That, for me, is going to be key this week. And what I am looking at is that crude oil could be the fly in the ointment for the XAL, which is the airline index, which is down 45 cents, having stopped right at the 200-period moving average, hasn't yet closed above 108.76. The 200-period moving average resistance at 107.47 right now, down 45 cents, but holding quite well. But I'm watching it because that weekly chart says, why don't you prepare for the two patterns that fight one another? One is the larger cup formation, and the other is the shorter term arch formation. And my preference right now is to say that arch formation is going to be more my focus. We have no position. I'm just saying it's my focus right now. Why? Because the IYT, which has been on a tear to the upside, actually leading the way and saying there could be a confirmation if the Dow, well, now it's going to be tough to do, but if the Dow is able to get to the 26,250 area, or even 25,320, somewhere in that range, then maybe we're looking at a test of the all-time high before we go down further. I think that that's going to be tough to do. So I'm watching it, and it made a peak C1, C2 double top, and we're at 203.70 right now, down 7 cents. 206.90 is the double top. That's really what we've got to look at. A move into the 207.50s would be extremely positive. But so far, it looks like a peak D has been made in the weekly chart, and a leg F to the upside, that cup formation in the monthly. I'll go into greater detail tomorrow, and I'll tell you why. There's a chance that if there is a big tumble based on tariffs, taxes, whatever you want, let's get 4 T's on it if I can make 4 T's in a row. But all I'm saying is that if there is a unified decline with the key indices all pulling back, it could be very sharp, very sudden, and very steep. But we have to get there, and I haven't even got the highs that I'm anticipating yet. So this is a moment where I think raising cash is really important. Now, one thing I want you to do is let me just check to see if there are any messages here. Might have missed something. Okay. No, okay, good. So what I'm looking at here is that the TLT, this is fascinating, down $1.06 at 119.94. Now, for my subscribers, I'd said over the weekend, I haven't got the chart, I'll do it here. I'd said that the yields are in a range, and as a result, they've gone towards the lower end of the range, but everything that I'm looking at is suggesting at least a little longer that the yields are going to stay in this range between, say, let's call the TNX, the 10-year, the key, 28.97 up 44 cents right now, 2.897%. My thinking is, yeah, maybe it fills that gap a little bit, but that's going to be key, because if there's a move in yields above 29.55, whoa, that's going to be something. And then we've got to watch the XLF. If you don't mind today, I want to just be free thinking like I do on the weekends. I want to just go where everything leads like a domino effect. So 28.34 on the XLF, up 1 cent. Yields are moving higher, and yet I'm calling this for now a B. This has more the look of a G. This really has a look of a G. And I'm looking at the XLF. We are not in, we got stopped out of our position in Goldman Sachs. We had a small startup position. I gave it a 1% risk. It needed to hold. I'm not just hanging, I'm testing it. This is like a 1% tester. I need to see when will Goldman Sachs form the kind of low that starts a big move to the upside. This is the big test. So XLF right now only up 2 cents, but it should be up higher. And Goldman Sachs down 1.28 at 23.6.53. I could have kept that, but the spike said that those 4 red candles from last week, that it was 1 candle too many. If the candle on Friday closed above Thursday's high of 241.12, I would have said fabulous. I want to add to the position. No, I said let's just be real careful. I want to get a feel for this. This might take us another couple of turns, but at some point, Goldman in this monthly chart is saying watch it closely, because that monthly chart has an incomplete leg D to come in the 280 area. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So as I was saying with the TLT, I still believe strongly that when we finally get that decline, the consolidation, we will see the TLT start to go to the 123s or higher. That's just kind of my thinking, but we've gone to a peak E, it's rallied, it's pulled back quite sharply from the 122.5 area to 119.97 right now. That's a pretty big move. But look at the weekly chart. This is what I've been saying. Yields are stuck in the range, and we're going to go from the lower part of the range to the upper, and at some point I'm suspecting that we break the lower part of the range, and that'll be the final try for 2018 to be able for people getting mortgages to get a much better rate than they've been getting at the last couple of months. So that's just my thinking. Let's get back to what am I missing? High-grade copper was down earlier on. Yep, down. Whoa, down very sharply, just about to test the August low. You know, I took it off the list. We were going to buy a very low-priced copper stock. I said, you know what? I'm not interested. In fact, this is where we want to raise cash. We're going to be raising cash. Now, I've got a bunch of questions. Let me just get to a couple of questions. EEM. Remember, I said EEM, I'd be very careful. Yes, the 41.67 200-period moving average in the weekly chart is probably going to be tested again, and then could hang around just going up and down between that. But at 42.32, down 85 cents right now. I'd just be real careful about it. Caterpillar, question about Caterpillar. CAT is trading down $1.61. I have it on my list. I want to see how this weekly Chapman Wave Roman candle at a low is going to act. Usually a close above this 2 out of 3 bars, as weeks in this case, that would be above 140.21. I'd be diving in and saying, I'm prepared to start positions in this. Not yet. It hasn't done that. It hasn't been able to close anywhere close to that. So be careful. Caterpillar monthly chart still says time to be careful. Yes, FXI is the same thing. Look at the monthly chart of Caterpillar. Look at the monthly chart of the FXI, the iShares China Large Cap ETF. Round number 54 high in January. Now it's trading at 41.99. It's already hit 40. I'd be very careful. I do think that FXI at some point will rally sharply. I just don't know if it's this move right now. So that was a question. 52-week, low to come. Yeah, Triple M. Triple M's on my list. We haven't had a buy on it yet because I'm looking at it. It's almost the same thing. Look at that candle. I'm prepared to wait. I don't think there's no rush to buy the laggards because when they start to move, you'll have plenty of time to buy them. I'd like to get pretty close to the exact low. Hey, if you don't get it, you can get the next leg on the upside. Hold off on 3M trading down 323 at 207s. Next question. Oh, Boeing, as always, I get my Boeing question. Boeing, I said, would be in this range. It's up 88 cents at 343.67. No, it's just stuck. Look at this weekly chart. U-shaped pattern followed by a second U. This is like the inverted lowercase h goes to lowercase m. In this case, lowercase u goes to a lowercase w. And the weekly chart is just sideways. You know that weekly chart? Just have a look at this. SMH today, semiconductors up 14 cents. Look at that. This is a really an amazing looking potential Chapman wave stalk leg formation. If it breaks above 114.55, the market vector semiconductor ETF trading at 109.10, up 16 cents. Look at this. It's got this little down channel in the daily. Hasn't spiked higher yet. Watching it closely, this could be an aberrational move to the upside. We'll see. It hasn't broken. Here's this Chapman wave inside track, repellent zone. Is this the week that it's going to break above? Is this the week that it breaks above and then is a real trap because it can't hold by the end of the week? We'll see. Meantime, watch it closely because a move into the 110.30s in the semiconductor index is a good market barometer. Any pullback at 109 right now, any pullback below 107.30, be careful. I think it'll be a quick run to the downside. Okay, here we go. WWE. This is World Wrestling Enterprise up again today at 88.25. How many times have we seen this cup formation, basically the rectangle break to the upside? This is so unusual in the thousands of charts that I do. The rectangle formation is the one that inevitably will stall just above the left side flagpole. That's the left side, in this case, peak F at 85.93 on the 27th of July. Here it is in leg C. Just every day it's making a nominal new high, all-time high. And it's leg G/C in the weekly chart. This is good. This has got nothing to do with tariffs. This is saying we're in for the fight. All right. WWE fake stock. Hey, I don't care what it is. Look at that. Look at that. Look at that chart. That's fantastic. Grubhub. Grub. Trading at new weekly high leg F, could be an alternate count. B, monthly chart is leg D, excellent action. Leg C, just made, you see, this is where I went through all these charts. Peak C on Thursday, confirmed Friday, leg C goes to peak C. Now it's just squeaked to leg D. That's why I'm saying, I'm looking at this and I'm saying we are real close. ABMD, a Biomed. Can't believe I looked at the stock in great detail and said, you know, as a heart participant, this should be A, B, C, something that I buy. You know, this is the old, what's his name from Fidelity, Peter Lynch. What you eat and what you use and what you see in the parking lot, that's what you want to be buying. So I looked at this and I thought, come on. Heart assistant devices, how much can it, what can it do? Hey, what can it do? It can go, and I used to look at it way back in 2000 and, I didn't realize that this went all the way back to the 1994 era. So when I looked at this back in 2004, 5 in the 10s and then the 20s, I'm thinking to myself, maybe you should just buy this as an insurance policy. It's gone to 410. It had a high of almost 450. A Biomed Inc. heart assist devices. Unbelievable. I'm so thrilled because it means that it's working, it's doing its job. My heart is pumping away. Good. No, I don't have one of these things. I'm just talking about my history. Okay, 410.63, up 4. Very good action, but it has made a peak G in the weekly chart, and it has made a peak C minus at an all-time high, which is very unusual. Because, it went to 450.93, 450.65, Chapman wave 2-bar reversal on the 20th of June. So I'm watching this. Can you believe these are the stocks? Venom, V-N-O-M. In the den, we always have Coda talking about it. Venom trading at 38.90, down a penny. I'd say to him a few days ago, it's made a peak G with a doji top in the daily. Things going to pull back a little bit. Weekly charts made a peak D, still very good technicals. Monthly chart looks great. So this is called Viper Energy Partnership. Hey, partnership, this is a good partnership. It's doing very well. It's pulling back here. So I'd say, I'm still going to say look for the 37 to 35, I said. I want to see how that holds as support. All right. Anyway, I don't want to go through them all. 5 is one of those. 5 is 5 below, quality brands for $5 or less. Huge leg F in the monthly chart, leg E in the weekly chart, and it's just gone to a leg D in the daily chart. That's why I'm saying getting a little bit cautious here on the shorter term, even though we have long positions. Just getting ready to start implementing some shorts. I'll be right back. Basil Chapman.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Nike is part of what's pulling the Dow down. Nike's down 2.84%. at 79.86. Made that peak D top right there. Look, I forgot to put it in. D right there. Remember I said D's where you got to be careful. And there it is in the weekly and the daily chart. Leg F, possibly a leg F in the weekly chart, and a monster leg E in the having gone from the 50 level when everyone was giving up on Nike, and it runs all the way to the most recent high in the 83s, trading right now 79.85. I'm watching this closely because, oops, that's an F. I should have put an F. Yeah, so be careful. There are some stocks that are just, news is going to be important to them, and I suspect Nike is one of those, pulling back quite sharply here. And the chart says, you know what? Holding well, but if it closes under 74 at any point in the next 2 weeks, that's a real problem for Nike, and that's going to be a drag on the Dow. So let me just sum up quickly. I think there's just enough strength to push to higher highs. The month, I'm going to emphasize, it's like I've done for the entire year, I think. I've spoken about these monthly charts still look very good in all the time frames on the indices. Look at the Dow. The leg, this is a leg, gray leg A, to go to an F if it goes above 26,616. But so far, the actual technicals of the MACD have held well. It's starting to deteriorate enough for me to say I'm a little concerned on any big pullback. Any time the Dow pulls back over a 3 to 4 day period, more than 450 points, I'm going to have to watch this real closely, because that's going to impact the stochastic, even though it's a whole month of September to go, because it's getting ready to pull back under the slow-moving average, and the stochastic's rallying, but it's only at 75%. However, if you look at the S&P, the monthly charts are very strong. So the question was, in the monthly charts, what does the monthly charts suggest in the Chapman methodology? And I've been saying this for a long time. They still look very good, and you can't go to a negative monthly chart without the daily tanking and impacting the weekly sharply. So far, that's a real good sign, and I'm going to emphasize that. I'll emphasize it again. Even the QQQ, but it hasn't made a new high today, the first day of the month. This is leg E, but the technicals are actually very good. Now, I want to emphasize that we're talking shorter term. I think we're getting close to some kind of a top. Thank you very much for being here. Stay tuned for Steve.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.